JPMorgan has kicked off the big bank earnings season today with record profits of $19 billion. And yet the market is disappointed, sending JPMorgan shares down as well as the rest of the banks. Anthony's going to try and make heads or tails of this.
You've got a couple of things. Firstly, JPMorgan missed earnings ever so slightly by a
couple
cent.
Pennies.
Yeah, I mean, virtually irrelevant. But right. They had put out a good deal of information in December about how they do. So they're roughly in line with what they said they'd probably get. But you've got this this awful DVA.
There's a lot of tension. Any penny here and there.
Yeah,
people are freaked out about
exactly.
banks.
And the big thing you had this quarter, or last quarter, sorry, was you had this thing called DVA, which is how you account for your own liabilities. And they lost a bit of money on that because their liabilities improved. It's a ridiculous accounting.
It's one of these freakish things.
And you can never really quite work out how much that's going to affect. So maybe that was it. But also don't forget, we've got this news that S&P may downgrade whole swathes of countries in Europe. So and people get worried about Europe.
Maybe overwhelming the JPMorgan.
Quite possibly, yeah.
But there was still some, I mean, you know, there's a lot of positive signs in the JPMorgan. I mean, they have been one of the strongest banks through the crisis. Yep. They have continued to manage pretty strongly under Jamie Dimon.
Yeah.
Where else was there? I mean, the investment bank got hit a little bit where there was strength.
They got hit a little bit, but again, we knew that. They came in pretty much in line. In fact, if you look year on year, for the full year, the investment bank did pretty much the same on revenue and earnings as it had in 2010. Mortgages are still a bit of a problem. Well, a big problem for all banks, obviously. Retail services, banking services was down a little bit, partly because of this Durbin Amendment. They lost about $350 million of revenue in the fourth quarter of the year because they're not getting as much money.
But nothing that was like outlandishly
huge.
Scary. Nothing that should have surprised investors.
No, they're fine. Their return on equity wasn't particularly good. 11% on common, 15% on tangible, which it's not the worst of the group, but it's pretty lackluster.
And is there some sort of read across? Should we be expecting? I mean, because JPMorgan has sort of stood apart from the crowd a lot, is there really a lot to read into what this means for B of A on the commercial retail side, or say Goldman on the investment banking side?
You're probably going to see pretty much the same thing for the others. Of course, they both, Goldman and B of A, have got their own issues to deal with. Goldman's still trying to work out what it wants to be in the trading business.
Right.
They all do, but I think Goldman was much more involved in risk-taking.
And their market share in fixed income has
that's dropped a bit, yeah. B of A, obviously, the big thing there is mortgages, and will remain mortgages. It's the only unit which wasn't profitable in the first 3 quarters of last year.
Right.
So yeah, the read-through is, it wasn't a great year last year. It wasn't a bad year for some of them compared to others. 2012 may well be better. The big thing we're waiting for now is the next stress test from the Fed, and we'll get the results in March. And what that will probably mean for JPMorgan is that it'll be able to increase its dividend a bit, maybe buy back some more shares.
Jamie hopes that's going to be kind of like the thing that clears the deck.
He's hoping so, although he also
always seems to kind of...
Yeah, although listening to him on the call, he's also worried that by the time the stress test results come out, the bank stocks will have gone up enough that he'll actually pay more money to buy back his shares, which he's not particularly happy
also
about.
Funny that the man who hates regulators the most is now counting on them the most to kind of help him
absolutely.
out.
Don't get me wrong. You again, listening to the call, he's come up with loads of gripes about regulators. He's saying there's lots of contradictory information out there. The government and the regulators around the world
are. Stress tests.
Well, he wants the stress test out of the way. He wants capital issues out of the way. He wants everything out of the way so he can just carry on and make.
One other thing to hit on is pay bonuses in investment banking. We've gotten the first glimpse of it with JPMorgan. What did we see there?
A nice little swap to shareholders there. I think that even though earnings the investment bank were relatively flat, they actually dropped compensation by 9%. Headcount was down ever so slightly. So it's a nice little thing for shareholders to get in a bad year, but it's not making a great bit of impact. I think it went down to 34.5% of revenue as opposed to 37% the year before.
But they managed to still have decent returns in the investment bank.
Yeah, was it 17% return on equity?
Which is going to, I think, good. Places like Goldman are going to maybe struggle to achieve. All right, well, we'll leave it there, and we will be back next week with more bank earnings and other news on Breaking Views.